The auditing landscape is evolving rapidly. Small and medium-sized entities form the backbone of the East Africa region's economy. Auditing these entities requires a tailored approach. The international standards on auditing for less complex entities provides this framework. This guide serves as a roadmap for audit professionals conducting audits under ISA for LCEs. This guide is designed to be practical and easy to understand. It provides a step-by-step approach, outlining the key considerations and actions required at each phase of the audit. References to the IAASB guidelines are provided throughout to ensure alignment with international best practices. Before embarking on the audit journey, it is crucial to establish a solid foundation. This begins with ensuring the audit firm's system of quality management complies with ISQM 1. This system provides the framework for engagement quality throughout the audit. Next, an engagement quality reviewer should be assigned. The EQR plays a critical role in overseeing the audit and providing an independent assessment of its quality. Their objectivity is paramount. Finally, independence and ethics checks must be performed for all team members. This is not a mere formality. It is about ensuring the audit team can act with integrity and objectivity. Documentation of these checks is essential for demonstrating compliance. With the foundation in place, the next step is to determine whether to accept or continue the audit engagement. This involves verifying the entity's eligibility for an audit under ISA for LCEs. The criteria are specific, focusing on the entity's size, complexity, and ownership structure. Preconditions for the audit, such as management's responsibilities and the availability of key personnel, should be evaluated. The rationale for accepting the engagement should be clearly documented. This provides transparency and accountability. Once accepted, an engagement letter outlining the scope of the audit and the responsibilities of both the auditor and management should be issued. This letter serves as the formal agreement between the parties, setting clear expectations from the outset. Effective planning is crucial for an efficient and effective audit. The audit team should discuss and agree on the overall audit strategy. This includes the scope of the audit, the timing of procedures, and the resources required. Materiality is a fundamental concept in auditing. It helps auditors focus on matters that are important to the users of the financial statements. Materiality thresholds should be established and documented. These serve as benchmarks for evaluating misstatements. A clear timetable outlining key milestones and deadlines should be developed. Regular communication with management is essential throughout the audit process. This ensures everyone is informed and aligned. Identifying the rapids, risk identification and assessment. Understanding the entity and its environment is crucial for identifying the risks of material misstatement. A team brainstorming session should be conducted. This encourages diverse perspectives and facilitates a comprehensive understanding of the entity's operations, industry, and regulatory environment. Identified risks should be documented along with an assessment of their likelihood and magnitude. This assessment forms the basis for tailoring the audit approach. It also allows for appropriate resource allocation. The appropriateness of applying ISA for LCEs should be reconfirmed in light of the identified risks. If the entity is deemed too complex, a full ISA audit may be necessary. This ensures the audit approach remains appropriate. Navigating the waters, responding to assessed risks. The audit team must design and implement appropriate responses to the assessed risks. This may involve testing the operating effectiveness of controls or performing substantive procedures. Substantive procedures are designed to obtain direct evidence about the amounts and disclosures in the financial statements. ISA for LCEs requires that some substantive procedures be performed for all material transactions, classes, and account balances. This ensures a minimum level of audit coverage. Throughout this phase, auditors should maintain professional skepticism. This involves a questioning mind and a critical assessment of audit evidence. Reaching the shore. Closing and concluding procedures. As the audit nears completion, the focus shifts to closing and concluding procedures. All identified misstatements should be aggregated and discussed with management. Corrections of material misstatements should be requested. Closing process tests are performed to ensure that transactions and events are recorded in the correct accounting period. Overall analytical procedures are performed to assess the overall reasonableness of the financial statements. Review for subsequent events is essential to ensure that any events occurring after the reporting date that could impact the financial statements are identified and appropriately reflected. Delivering the cargo, forming an audit opinion and reporting. Based on the audit evidence obtained, the auditor must form an opinion on the fairness of the financial statements. This opinion should be clearly stated in the auditor's report. The report should comply with the requirements of ISA for LCEs. The auditor's report communicates the findings of the audit to the users of the financial statements. It enhances the credibility and reliability of the financial information. Anchoring the ship, wrap-up and file completion. The final stage of the audit involves completing the audit file. The audit file documents the audit procedures performed, the audit evidence obtained, and the conclusions reached. A thorough review and sign-off process should be in place. This ensures the audit file is complete, accurate, and supports the audit opinion issued. The audit file serves as a permanent record of the audit. It may be subject to review by regulators or quality control inspectors.